Okay, so for those just joining, welcome. I'm Jane Faree, and I look after marketing here at inQuba. We're thrilled to have you with us for today's webinar, Proven Strategies to Grow Customer Lifetime Value, Boost Premiums, and Reduce Attrition Using Behavioral Science. Today, we'll be discussing how financial institutions are activating new revenue levers and achieving critical business metrics through real behavioral change. So let me introduce you to our speakers. We have Hayley Parry and Gary Kale. They're co-founders of Cumulate. They're a dynamic team dedicated to driving positive change in finance. Gary brings over a decade of experience in financial education and insurance broking, with personal insights shaped by both financial highs and the challenges of debt. Hayley, equally passionate, leads Cumulate's education, media, and marketing efforts and is a serial entrepreneur, having previously founded and sold a successful media business. Together, they identified a unique market need, helping companies empower their customers with engaging financial education to overcome money challenges and make smarter decisions. Their value-added partnership model now enables financial services companies to reach and support customers at scale. Joining them is Trent Rossini, Managing Director and co-founder of inQuba. Trent is a recognized leader in customer journey orchestration with extensive experience at the intersection of behavioral economics, marketing, and technology. His background includes a decade at Discovery Group, where he led the online channel and launched PruHealth in the UK. As an Endeavour entrepreneur, Trent is passionate about leveraging technology to deliver measurable business outcomes and real value to clients. Together, our speakers will share proven strategies and actionable insights to help you grow customer LTV, boost premiums, and reduce attrition by turning behavioral science into measurable business impact. Thank you for joining us, and please join me in welcoming Hayley, Gary, and Trent Rossini. Let's get going.
Thanks, Jen.
Thanks, Jen.
Okay.
And good morning, everyone. Really appreciate the time that you've taken this morning to be on the webinar, and really hoping to unlock some real value for you for your businesses. I thought maybe just as an introduction, I thought maybe it would be a good thing to just explain who we are. I know that Jen did a great job, but I think in short, my co-founder Hayley and I run a business called Cumulate that fixes the customers of financial institutions like banks and insurers. And the reason I say fixes is because invariably, or by and large, most customers of institutions are broke. And I can tell you that after improving the financial behavior of over 120,000 South Africans, we also see that there's no immunity to the issue across all earning spectrums. So I'm saying that it's regardless of what a person's earnings are, what their level of education is, race, background, job title, we see that because of that, the debt to income ratio in South Africa is around 80% at the moment. The savings rate's at -1%, which means that people are really, really taking strain, and this really is not good for business, and this is not good for people. I think it's also important to say that we're going to be referring to different brands that we've purpose-built for use with our financial services clients. But the one that we are going to focus on a lot today is one that you may know called Worth, that currently forms part of Discovery Bank's Vitality Money offering. So something exciting just recently that Hayley and I had the opportunity to participate in is that Her Majesty the Queen of Netherlands, Queen Maxima, she was actually appointed last year as the UN Secretary General's Special Advocate for Financial Health. She really is a superpower in the world of financial inclusion. She's championed this for over 15 years across Africa, done really, really incredible things. And she was in South Africa and wanted to meet Hilton Kellner to understand how we constructed the money score and, and how they measure, how they've woven this capability of improving financial behavior into the fabric of their business. Hayley is going to talk to you a little bit more about that. But what really stood out for me is that whilst this was an incredibly powerful moment for me, professionally and personally, the real reinforcer is that what she spoke to was the fact that financial literacy is no longer good enough. And I can tell you that Hayley and my take on this has always been that it's nowhere near good enough. Because the reality is that having somebody be able to understand the terms and conditions of a loan agreement or an insurance product doesn't mean that they are financially intelligent enough to be able to actually understand the implication of what's going to come down the line in the next year, 2 years, 3 years, 10 years, and so on. And so the problem that we are really solving is that we have always seen a real disharmony in the financial services market. What we really have is we see financial institutions that really are going from strength to strength. And besides the fact that there are amazing products available in the market, amazing institutions, an amazing regulatory system in South Africa, we still see that customers of these institutions are still broke. And effectively, what I'm saying is that, and this is really why when you see Trent, talk about sort of what we've done together, you'll also understand why it was love at first sight when we met the inQuba team, because changing financial behavior is one thing. Switching on this kind of capability within a financial services company is a totally different ballgame. And the stuff that you'll see around their solution, and I think a lot of you already do know Trent, is the fact that they are able to really enhance and chase the same metrics that we were looking at improving in terms of anything that really is a commercial driver for a financial services company. So what we're going to unpack for you today is the fact that what we are talking about is that all the different strategies that you've taken to engage your customer, sell more to your customer, to improve your premiums, improve cross-sell ratios, bring down attrition and all of that, eventually what happens is you start bumping up against the financial position of a customer. You cannot unlock any more yield from that point onwards, where they just don't have the money. And the truth is that if somebody is sold a retirement product or they're investing, they are not retiring. I mean, I'm saying, yes, fine. There's 6% of people in South Africa will retire. So just excuse me in terms of the numbers. But 94% of the people tell you that this has become a real problem. In other words, it's normal to work your whole life and end up broke. And people that have got a life product or that, an insurance product, the truth is that the principal does die. The family are in serious financial trouble because they never really actually took enough risk product. So we're very, very passionate about making people wealthy. And we do this without selling the product. We leave that to the financial services companies. It's our job to drive what we, in terms of our shared value model, is to increase engagement of customers, but not just increase engagement. If you take a look at the image there, you'll see that our job is to improve the cash flow of the client, bring down their levels of indebtedness to a reasonable position, bring their stress down so they've actually got bandwidth to be able to understand what's going on and focus on improving their money, and get them investing, get them saving and doing the right things, whether they're in a relationship, whether they're struggling with family tax or all the other incumbent problems that come. And that is effectively what our business does. And what we've proven over the last decade is that we can create this shared value model for an institution where the customer is better off financially, the institution itself is making more money, its distributors and brokers and planners are making more money. And what that results in is a heavier investment into this area of business, which really is making a difference and shaping how people are achieving their financial goals, and at the same time enriching financial services companies. And so this is the shared value model that we drive within our institutions. And we could really just do an entire talk and for hours about how that happens and how we would measure it and how we would map it. But really what today is we're going to zone in on a particular area where we have worked very, very closely with inQuba with a critical part of how we actually weave this capability into a business. So before Trent starts addressing that, we also thought that it would be really meaningful for you to also just see from Haley's perspective and from our perspective why most behavioral interventions really just don't produce lasting financial behavioral change. So over to Hels.
Thanks, Gary. Okay, so I'm going to check that those of you who are on the call are still awake. And I've got a question for you guys, and I'd like you to answer it by showing your emoji on the screen, either a thumbs up or a thumbs down. And this is a question that we quite often ask whenever we're in a face-to-face training environment. But how many of you would or are doing with your money what you saw your parents doing with your money? Yes or no? Okay, I'm seeing quite a few thumbs up. That's quite unusual, I must tell you. Okay, I see some shock face emojis, and I'm assuming that's a no. So yeah, I mean, this is a really interesting question, because most of the time in a room, and I can tell you, regardless of the size of the room, I often get like 1 or 2 hands that are sort of half up. But most of the time people are like, I saw what they did and I don't want to do that, even if I don't know what it is that I do want to do. And so what we've learned over the years is that there's layers as to why people don't do this. I mean, one of the jokes that Gary and I often make is, when do couples talk about money? And the answer is when there is none, right? So this talks to the emotional side of stuff. Money comes with its own layers of emotional stuff. It comes to how we were raised. There's often fear and shame, in that space, and that makes it difficult when you're trying to figure out what to do with your money. There's also this aspect around the information where either we were taught nothing at school, or sometimes we feel like there's too much information, there's information overload, or it's not coming at us at the right time. But the reality is that for most people, no one really wakes up in the morning and jumps out of bed and says, today I want to get myself like financial education. Even though I do this for a living and I'm very excited about this. Sorry, let me just move here. We've got a sensor problem in our office, so I didn't move enough. I know that there is a huge grudge factor. This is kind of like, it's kind of like buying insurance, sorry to any insurers on the call, or getting a mammogram or having your prostate checked, right? It's important, but you'd really rather be doing anything else. So these are the things that we know hold people back. But what does it look like when we get it right? Right? Because that's what you guys want to know. How do we do this what does it look like when we get it right? And a little bit earlier in the session, Gary was talking about when we met Queen Maxima the other day. And to me, this picture embodies what it looks like when we get it right. Okay, so Queen Maxima is the blonde-haired lady in the middle. You might have seen her all over the news yesterday. Apparently, she was potentially mocking Trump when she met him in a photo op. It's worth a look at some articles after this if you're interested. And then the people to her left is a couple called Jonathan and Latoya Cleary, and they're a couple from Fourways. And earlier this year, they started the new year with a feeling of like, how do I fix my finances? And they stumbled upon the Worth benefit, because Worth is our brand that we do with Discovery Bank, and they did our course. And fast forward to 3 months later, here they are in Cape Town meeting the CEO of Discovery Bank, Hilton Kilner, he's the other guy on the other side, and Queen Maxima. And so, this is what it looks like when we get it right, when we've got customers who had a need that was met at the right time, and they were ready to do the work involved in improving their financial wellness. And then culminating to the point where Discovery have this opportunity to interact with Queen Maxima. And what do? They phone us and they say, hey, Haley, we've got an opportunity to do this roundtable with the Queen of Netherlands, and we would like some of your Worth learners to come and share their experience with her about your benefit and how it's improved their ability to bank with us. And so there's a real partnership thing that happened there. And so, this is what it looks like when we get it right. And I think what you want us to help unpack is, how did that happen, right? So guys, if you could go to the next slide. Where it started is, I've literally taken a screenshot here of the testimonial that Jonathan wrote after he finished doing one of our courses. It's called Wealthy Couples. That's why you see there's him and his wife in that picture. And this was something that was always housed internally. So after someone has done one of our courses, we always do an assessment, both pre and post learning, to find out, how have we shifted critical metrics. And then we always give our learners the opportunity to tell us their story, because storytelling is a really important part of what we do. It's how we know we help people learn and learn better. And this is Jonathan and Latoya's story. And by the way, I am sharing this with their permission. And I think what's quite cool about this is you're going to see a little bit later on how we managed to take this piece of our business and really turbocharge it with the help of inQuba. And so we're going to get to that later. Next slide, please, guys. So So I think what it comes back to now is, how do we unpack the how? How do we get this working so that we get to the point where a customer is sharing that kind of story with us, and then ultimately, us working with our customer here, who's Discovery Bank. And for most financial services companies, they think that this pillar that you're seeing in front of you here, this financial education piece, is the thing that you have to get right. But in reality, we have a platform approach where there are actually 6 pillars, and there are 29 components in these 6 pillars. And we are passionate about getting each one of those 29 components right, because the sum really is, where we really see the impact is when the sum of the parts come together. And so from a customer-facing perspective, if you can just skip to the next slide, what we have here is, you can see how we bring these things together. I've just illustrated with some examples. So uptake and usage drivers in the discovery context, you can see on the screen here how they're sharing information about this benefit in their newsletter. They're sharing it on social media. They're driving their customers to utilize this benefit. Another part of it is in terms of, the automated engagement. So what we used to do prior to working with inQuba is we had SMSs in the old days, emails. We have a high-tech, high-touch approach in terms of how we surround this benefit, but the automation of nudging was a critical piece. And when we heard about what inQuba do and how they can supercharge that piece for us, well, that's obviously how we landed up working with them, right? But in terms of, sorry, just to go back to that previous slide, in terms of the one piece there, you'll see that customer advocacy is a critical part of the financial education pillar. And we've got on the screen there is an example of work that we've done with One Life, where they took one of our the learners who had done one of the courses we built for them, and they've now started to sharing these stories of these learners on TikTok. And Zanzi's story is actually one of my favorites. But you can see how there are so many elements that we bring all together in terms of how we create engagement, firstly, and then lasting financial behavioral change for our customers. And one of the critical pieces around this is customer advocacy. And I think this is one of the pieces I'm most excited about in terms of the work that we've done with inQuba as well. So that story I shared of how Jonathan wrote us his story and inputted, that was available internally in our business. But through our work with inQuba, what we did, and Trent will unpack the journey just now, but there's a piece at the end of that journey, once people have completed the course, where we say to them, hey, would you like to share your feedback with us? And through that process, there's 2 things that we got right in this journey. And the first is, sorry, no, back, I'm not finished there. So the first piece is around these reviews, right? So what that review looked like internally for us with Jonathan, what I've got on the screen here is an example of what it now looks like when it's made public. And what is so beautiful about how this works is, what we did was we took the existing piece of tech in our business where people had given us that feedback, but through the inQuba integration, we actually just pushed that back and said, hey, Michael, as per this example, if you would like to share this review publicly, here's the link on Google, and here's your review, so they can literally copy and paste it in. And what that's done for us is huge. So before we started working with inQuba, we had 40 reviews about what we do on Google, and we now have over 645. So, I mean, we've only been doing this particular journey for 3 months with him. So for me, this is an incredible achievement. And I think, next slide, please. The second piece is around here, is that we've got also people referring. We had of the people that opted to give us feedback, 84% told us that their mind was blown and was totally worth it, and 640 of those, or 44%, are saying, hey, I would like to tell my friends about this benefit. And so these are really positive attributes that really are making a really big impact. But there's a broader picture around other impacts and metrics linked to the business side that I'm going to hand back to Gary, that he can unpack for you.
Just something that I'm thinking, like when I'm looking at the slide, is that it just really is very cool. We've been very, very fortunate in our business. You look at the interplay between ourselves and our client. Like, what we are hunting is high utilization. because our goal is 2 million changed lives in South Africa by 2029. And financial services companies really they've got the muscle, they've got the infrastructure, they've got the customers, and effectively we are looking to get high percentage of database improved financially. That's our goal. And this is how the two things really just fit together beautifully, because when we talk about referring a friend, yes, they're referring them to our benefit, but remember that it is coming through a Vitality Money channel where they are getting people activated and using that benefit, which is the reason how we got our Vitality points in the first place. It took us 4 years to get Vitality points because they really were obsessive about the data. And the beauty is we've got the track record and we know what we're looking for now. But it took years before we could prove that they're really genuinely getting 150% increase in savings and engagements up by 57%. And people who are using the benefit really are showing much better debt repayment profiles and all that kind of stuff. So I think the place where just to really bring inQuba in, and just this is a really critical part, which I think you're going to be interested in. So now what we've demonstrated is that, yes, financial education is a really important component, but it is really one pillar. How do you now weave this into your business? Because effectively, if we look at just sales journeys in terms of integration into a business, the sales journey is very different for a life company, for an investment business, for a health company, for a direct sale, for a broker or direct intermediary, all that kind of stuff. So the reality is that this is where the customer journey augmentation comes in. It's what does your journey look like? What does ours need to look like? And how do you make those two things work on a technology platform, which quite frankly, you don't want to have to worry about, because you're not really interested in worrying about what is learning going to look like in 2 or 3 years from now with AI. And is WhatsApp the thing that people are still going to be using in 3 years? The point is that we are agnostic to platform, and it's our job to make sure that we can do this. Now, this is a part of the business that we both businesses already did. We would sit with the sales director, we would sit with their teams, we would sit with head of customer service, and we would understand the best place to strategically, tactically use this to bring down, non-take-up rates, or when people have missed premiums or whatever it may be. And what does it look like, the narrative, and how does it all go and fit? And we work really in high detail across all of those things. And this is the approach that we've developed. And I can tell you now that we've been doing this for years, and we started working with inQuba towards October last year. And it really felt like placing a big bet, because we just knew that this is so important to the business, because it can really drive traction. So we've had to learn how to get completion of just as a different muscle that we're talking about is like, how do you get people to complete online training when like the average is like 3% completion? How do you get that to a 55%? So we already understood deeply what these journeys look like and what data to be measuring. But I can tell you now that when you take two teams that are really obsessive about something, I love detail and I love the data, but I can tell you now that, Haley really just championed this with the inQuba team internally. And when I listened to how thorough and how many now hundreds of slices we now have of different optics, of different things we're saying, doing, responses to questions. And when you take a look at the dashboard we've got with sentiment and the thing that's bothering people the most or they like the most, things we would never have actually been able to do. Like, we made a bit of a joke when we saw Trent last, and I said to Haley, Trent, this is something you really don't want to try at home. When you look at how complex a customer tree looks like, you really need people who understand it. So I'm just saying we really are grateful for what they've done. We now have a fully automated processes, which means that we now are able to be much more agile, much more deliberate, and much more on point when we're targeting real commercial levers in businesses and being able to wrap this into those in a very sort of templated approach. So I'm going to hand over to Trent now just to talk to you about how this has worked on his side. Trent, I want to stop sharing and just you can take it from here.
Thank you very much. Great. So thank you both to Gary and Haley on multiple fronts, obviously, for being here today. for being fantastic customers and partners, and obviously for the intro. I think, for people that have worked with inQuba, you'll know that we've come from a background of customer experience management. And if you've been following of late in the LinkedIn space, there's been a lot of discussion with a lot of experts. And I think the narrative is really centered around this whole idea that the idea of having surveys and somehow using those surveys to change behavior in a business, it's just that approach and philosophy is just running out of road. And quite frankly, it's just not working. And we're seeing that repeatedly. And if I contrast that to today's discussion, and specifically, I think probably the most succinct summary of the value of the journey approach was really shared by Gary and Haley in the referrals. It's great to theoretically have this idea of a net promoter score, but it's a theory. And quite frankly, it's a questionable theory because there are many papers that debunk the myth of the importance of NPS. It's fundamentally different if you get real referrals, and the 600 plus referrals and growing every day. That shows advocacy. That's what brands really should be looking after. So I'm going to jump in and just share our perspective in terms of how we do customer journey orchestration. And you'll see, we came to this from an entirely different point of view. We're obviously not in financial education, but having seen and met and now spent considerable time with the Accumulate team, we are so aligned in terms of the underlying philosophy that we have, which is it's all about driving customer behavior. So we work with clients across different industries, and our objective, just like it is for Haley and Gary at Accumulate, is to drive profitable business. They described it obviously as a shared value model. And the way we go about doing that is we identify customers that are trying to achieve a goal. Now, it's very obvious that the goal in this particular scenario is getting people to go through a financial course. And we all know how incredibly difficult that is. The value is immense, but the difficulty is equally large. And customers don't start off at the goal point. And we've heard many stories and great stories this morning from Haley in terms of people that have changed their lives. They've been on a journey in the metaphor of the idea and actually in the practicality of the execution that we've done together on the Worth product. And the two key philosophies and approaches that we use, and those are really played out on this case study, and that's why we wanted to share it with you. The first is you want to nudge. As some people in our debtors collection team said, nagging activated. And in many respects, when you're driving a business and you want to get acquisition, you want to change behavior, you have to activate nagging. I mean, you need to do it in a nice and acceptable way. And the second part is, well, you can't just nag. You actually have to have substance to your nagging, and put differently, you need to have value. And in the Accumulate case, and we're together with Discovery, the value is in the content. It teaches people things that they didn't know. It helps them deal with finances and helps them overcome obstacles. And that really leads us back to where we are and what we're discussing today, which is managing customers along the customer journey. So regardless of the background that you come to today, and you may or may not be in the financial space, and you might be in the education space, but I think there are some universal truths that play out. And I often present this picture to our clients and ask them the question, do you know who's on your customer journey? Do you know how long they've been on the journey? Do you know who's dropping off? Do you know which nudges are effective? Do you know which journeys are profitable? Do you know what you need to do to get customers to move forward? Do you know who to phone and actually assist along the customer journey? And you have to know the answer to those questions ultimately to drive profitability. So I'm going to borrow from Haley's playbook here and just see if people are awake. We've still got good attendance, so that's a good sign. Just give us a sense of either dismay or thumbs up. Thumbs up if you're able to answer all these questions, and shock and horror if you're not. And let's just see what the perception is in the market. Oh, I haven't seen. Oh, one thumb, two thumbs. There we go. So it doesn't seem that that many people are able to actually answer these questions.
One of them was me, Trent, because now that we're working with you, we know.
Good stuff. So if we take that perspective and we take the customer journey and we put a different lens on it, we put a more analytical lens on it. The objective for any business is profitability. How do you get profitability? There's only 3 ways a business can make money. You sell to existing customers, you retain your existing customers, or you sell to new customers. It really comes down to that. And within a business, you always have many, many initiatives that you can be doing. Haley and Gary generate excellent content and they engage with financial institutions. Some businesses improve their servicing, others have to deal with sales nurturing, some people have to collect documents for FICA. So those initiatives are broad and varied. But inevitably, you can come back to a couple of metrics. And again, going back to our origins, often where businesses have come from is just focusing exclusively on customer feedback, specifically satisfaction. Sometimes they extend that to customer sentiment. Now, that's a necessary but insufficient requirement in terms of understanding the customer journey. You have to understand goal rate and drop-off rate. Otherwise, you can't answer the questions that clearly a lot of you said that you can't answer. You need to know which customers are on the journey and which ones have gone idle. You need to know if you send out an engagement, is it effective? You need to know which journeys are profitable and which ones are not. And that really leads us to what we do with customer journey management. And I want to quickly touch on our approach and our philosophy. So when we look at a customer journey, the first thing we need to understand is the context of the customer. So with Accumulate, they have a fair amount of context. They know, for instance, which partner they're working with. They know the course that someone is interested in. And right up front and at the start of the journey, they actually start collecting information, understanding some of the profile of the customer. And similarly, our clients either know a fair amount or sometimes very little, just that they came in via an ad for argument's sake. There's always some level of context. Then you start on the journey. Now, what is a journey? A journey could be acquisition journey. It could be an onboarding journey. It could be a servicing journey. It could be a renewal journey. It could be a transaction switching journey. And we always find some form of data that says, oh, okay, this particular journey has started. The outcome of a journey is one of 2 things: goals or drop-offs. Goals are good, drop-offs are bad. So the goal is that the customer has reached their goal. So basically, using different terminology, the job that they want to get done, so jobs to be done, or they've dropped off. And you'll be surprised, and we know this from all of the work that we do. And I mean, there's literally hundreds of journeys that we track for different organizations. Drop-off rates are high. I mean, often in the Accumulate case, they're doing incredibly well. And I mean, we're talking about incredible levels of success of, 30, 40%. That's amazing. But it's still, you're left with a residual of 60, 70% where people haven't been successful. And that's not to be critical of organizations, simply to say it's a massive opportunity that doesn't get the necessary focus. The other aspect that we are super focused on in terms of how we manage customer journeys is time. You need to know how long a customer's been on a journey. And most importantly, you need to know when they go idle. What's an idle? An idle means no longer progressing along the customer journey towards the goal. And obviously we track that. Then what we do is we collect context and we learn about customers and we adjust and personalize, and obviously AI can play a key role there. And then we use nudges, or put differently, nagging activated. So we can actually nudge customers along the customer journey, and then obviously we can use predictive models. Now, to do this effectively, and thank you, Gary, for the very kind words, you need 3 things to be able to do this really well. You need a methodology. You can't do this on an ad hoc basis. And we've spent, through, I might add, a lot of trial and error. We spent a tremendous amount of time building up a methodology and having a structured approach to get a predictable outcome. That's complemented by, obviously, an excellent team that I'm super proud of. I see some of our team members are on the team on the call today, and they actually work with our clients as we've done with Gary and Haley. And then, obviously, you need some kind of tech, because it's just too complex to do this manually. Can't be done with spreadsheets. In the world of online interactive omni-channel engagement, you need some kind of tech to be able to support us. So the way we go about doing this is we start off with a conceptual design. And this is a small extract where we started the design specifically on the worth journey. And we start looking at, okay, what are the steps, where we're going to communicate, what are the messages, what's the sequencing, what's the underlying data, how long do we delay? And that's part of the methodology, and this is part of making sure that you've got a structured approach to drive the particular outcome. What we then have to do is we have to go from the art of customer journey management very much into the science. And this is where the data starts to play out. So in our world, a journey point, which is a point on the journey, basically needs 3 pieces of data. And it's actually not that complex, just like a GPS when you're navigating on your Google Maps. Except in our world, we need to know who the person is. In our world, we call that a contact identifier. We need to know when it took place. So sequence is really important. And you need a transaction ID because you obviously need to know, are they just signing up with the course or the module 1 or on the review, or whatever the case is. And then obviously we wrap that with a whole lot of metadata, and we understand the context of the customer, and we collect a lot of insights. That's how we build up the profile of the customer. So we've then developed a whole lot of tech to be able to plug this in, because that's the first question. In fact, one that came from the Accumulate team is, can you plug this into our learning system? Because, you know, fortunately, the LMS that they're using is a very powerful and open one, but that's often not the case. So data is often a problem. The point is, and the only point I really want to make here is that we can plug into pretty much anything. I know that's a bold statement, but it is a key competency that we've developed. The result and how it manifests is a set of highly personalized structured messages. And I just want to pop up some examples over here. They're obviously personalized. They're obviously highly branded. They're obviously relevant. And most importantly, they're interactive. So these are bidirectional communications, which we're sending out to people, and we're getting feedback along the way. And that allows us to build up and understand the profile of the customer, and allows us, for instance, to track the interaction, in this case, into the NewSpring LMS. And we know that happened because we actually put Google tags on that environment, with then feedback into the inQuba environment, and we know exactly what's happening. So the result of this is, obviously, we're using a channel that works particularly well. We're now able to do this. I'm not sure if you're familiar with the idea of RCS, which is a new technology from Google, rolling out, in fact, with iOS and Android. And I think, you know, fortunately, it will be a nice complement to WhatsApp. We do this on email. We do this across the web environment, and we even now are doing some work in terms of prompting people in the call center environment. All of that then gives rise to the customer journey. And we're not going to have time to actually go into the detail, but I just wanted to give you a quick glimpse of a view of the customer journey. And this view over here is generated from data, and it's available real time. And obviously, as a client, you get to log in and you get to understand what's going on. What you can then do is you can drill down. Now, I'm going to just highlight some segments here that we've actually got. So we've got re-engagement. And okay, so on the next screen, we've got new customers. So obviously with the Accumulate team, they had a long backlog of clients that they had a manual process, and we ran re-engagement. And to be quite frank, we weren't as successful with that group, but that's not unexpected because they'd been around for a long time. And then we run engagement for all of the new customers, and we're getting amazing results on that front. Look, we're getting amazing results on both fronts, but obviously the new customers, we're getting even better results. What we're also able to do is, and this is part of that feedback, so we collect feedback continuously through these interactive chats that we're doing, and we present that data and we analyze it using text analytics. So from Haley and Gary's point of view, they have a continuous feedback of what's happening on the journey on an ongoing basis. We also be able to track delivery rates. So you can see the Accumulate team have high accuracy of data. That's why we get high delivery rates, very high read rate of 74%. I mean, I'd love to get a sense from, is anyone getting a 4% read rate on your marketing campaigns? Let's see if we can get some thumbs up on that front. I'll be very surprised if that's the case. No, as expected, no responses there. Even the engagement rate is higher. I mean, our engagement rate is 32%. I suspect if you're running emails and SMS in your environment, you're probably getting a 5 or 6% response rate. So we get a fundamentally different result. And then we can start to analyze the journey at a very detailed level. So just some high-level stats. We've got a 39% respondent re-engagement rate, thousands of new learners. And this is super, super exciting to know that we deliver tech where we've been somewhat of an indirect participant, but a participant nonetheless, in 15,000 people in improving their lot in life. That is super, super exciting. So just love the fact that we're working with the Accumulate team. As Gary said, it was love at first sight, and we continue to work well together. I think this is also, this analysis gives you a strong sense of the power of engagement. So what I want to highlight here is course completion for people that receive engagements and those that don't. Now, as you saw earlier, we have a certain number of people, we've got the wrong number, and we know that obviously from the technology as to who we can send to. And look at that. That is a 10-fold increase that we managed to achieve. So those people that didn't get engagements through their own volition actually completed the course versus those that we nudged. And it's just fundamentally different. So if you're looking for a 10-fold increase in your acquisition, your onboarding, your customer servicing, in being able to assist with clients, we really are excited about how we can potentially help you. We also get a lot of insight. And this, again, I think reinforces the importance of nagging activated. So look at the primary reason as to why customers are not, haven't progressed, and it's still getting around to it. It's hard to get people to dedicate their time to do financial education, all right? There's a very small percentage of people that are stuck. There's even a smaller percentage of people saying that that the content isn't relevant, which is really, really surprising given the contrast of people that said that it is. And then a small fraction of people say they don't have time. Obviously, if you don't have time, you're not making the time, but be that as it may, the majority of people are. And then lastly, I think it's a little bit of a repeat of what Gary and Haley put up earlier, but look at all this positive response. Now, again, this is not about inQuba. This is about Worth and the work that Accumulate is doing, but it's incredible to know that we've been part and parcel of people that have put themselves out there. And just remember, this is a sensitive topic. People usually aren't shouting from the hilltops around their financial management, and yet they're putting it on Google reviews and they're sharing it. So they must truly be loving it. I want to finish off just last 2 or 3 minutes about where to from here, because we've presented a very exciting outcome. But let's just reflect on where we come from. I wouldn't say that specifically Accumulate were in the situation of having no customer connection, but I think they had a fairly manual approach. What we've done together with them is we've worked with them to get these deep customer connections through personalized dialogues. But we're not done yet. Our next phase of development ultimately will start moving along and optimizing customer journeys and driving better levels of profitability. And then, yes, obviously we can apply AI to the space, and we're doing some very exciting work along that way. So if we look at the capabilities that support that, we've implemented nudges, we've done omni-channel engagement, we've managed goals, we've tracked back-end transactions, we've done channel interactions. And I think for people that are on the call today, I'd really ask you to reflect on, everyone says, oh, we can do ABC thing, and that's probably true, you could probably code it, but can you bring it together and get the kind of results that Accumulate have done? And we've done it in a relatively quick time frame. And yes, you need the tech, but what you need is the methodology and the experience to be able to do it. And really, we believe we can make a big difference. There are extra capabilities inherent in our platform. So journey segmentation, cost journey management, profitability analysis, integrating to back-end systems to be able to do things like document collection. And then the very exciting, but not all-encompassing element of AI, so doing intelligent chats along the customer journey and bringing AI and LLMs into the space. So for our clients, inevitably, and our potential clients, and hopefully some of you on the call today, you potentially are in a situation of lagging. All right. We would like to work with you, should you have the need, obviously, is starting to explore each of these elements, getting your first successes, and we absolutely are there. And that's why I'm grateful for the time from Haley and Gary to share, because we've got first success. And now we're working with them in terms of expansion and driving that out, and then obviously driving monetization. Fortunately, their business model is one that is centered around the whole notion of driving outcomes, and that's very much where we are. And then ultimately through optimization. So the journey is not necessarily a simple one, but we are able to deliver incredible results over time. And hopefully today's webinar gives you some insight in terms of how we go about doing that. That really concludes our formal presentation today. We're opening up the floor for questions from anybody, and really look forward to any questions that you might have.
Thanks, Shane. Thanks, Haley and Gary. If you have any questions, you're welcome to pop them in the chat or just put your hand up and I'll unmute you. We really do like to hear other people's voices too. So just go ahead and do that.
And we're happy, obviously, to have any debate around any points. In fact, we would welcome the opportunity in terms of different views and perspectives.
Maybe everyone's minds is just blown because, oh, there we are. Okay, we have a person. Question now, Julie. Julie, yeah, she is. Sorry, just give me a second to. You should be unmuted. There you go.
Hi, Gary. Hi, Haley. Lovely to see you. Trent, I was curious about whether the inQuba application could apply in a B2B context. And obviously the kind of the numbers and the volumes of customers will be very different from Accumulate World. But I was just curious about how you might approach more of a B2B model and whether that is something that is similarly beneficial to have a kind of customer journey like you've set out here. I'm an enormous fan of Accumulate. I know the business well, so I won't ask Gary and Haley any more questions, but I'd love just some insight from you on that, Trent. Thanks.
Sure. So obviously when you in B2C, when you've got this massive funnel and you're doing personalization to drive large numbers of people, in a B2 environment, you've got a far more complex set of journeys. I mean, whether you're talking about acquisition or servicing. So typically the level of personalization that you do in a B2B environment is far more intense. I mean, the extreme of a B2B environment is, you know, let's think of a merchant bank where you've got high-end, very expensive merchant bankers that are having personalized conversations with the CFO. Now, there's a continuum between, let's say, that as one extreme, and obviously some of the work that we've spoken about this morning. I think if you're in the world of very high-end people, very high value products and low volumes, then it's hard to actually find a case. Where we have found very strong cases for the application of B2B is typically somewhere in between. So think of a situation of dealing with small companies. I mean, you've got a couple of hundred or even 1,000 small companies. You can absolutely apply this. I mean, you're going to have to think a lot more about how you do much deeper levels of personalization. And obviously, you need to compare that, for instance, to the cost and value of an account manager. But really what you're doing is you're transitioning. I mean, ultimately, the objective is universal. Have high degrees of personalization that's highly relevant to people and move them across the journey. So that doesn't change whether you're in B2C or B2B. The question then is, how much intelligence do you apply to your personalization? How much monitoring would you want to do across the journey? And yes, I mean, even as, to be honest, we use this in our business, is we actively personalize for potential prospects, looking at their business and generating content that's right down to the specific of the individual. So it is highly relevant to B2B, and just hopefully outline kind of the differences of approach across those environments. So Julia, I just want to check if that's answered your question.
Yeah, super. Thanks, Trent.
Okay, thank you. We have another question from Anton. I don't know why I'm struggling to unmute. Trent,
There we go. Yeah,
Okay.
he's unmuted.
Anton?
Still showing him as muted.
No, he's not. Sorry, Anton, to be clear, you muted on your side, so we've allowed you to speak. There we go.
Sorry about that. Morning, guys. How you doing?
Good,
Good
thanks.
Good to see you guys again. Just a quick one. Nice to meet you. In terms of frequency of contact, our business in particular, we have found that fine line between frequency of contact with the customer, we still get to either irritate them if you contact them too much, reduce them if you can't.
So Anton, you're very faint, but I think what I heard is, how do you deal with frequency of contact?
Yeah, correct. Sorry.
Oh, there we go. Oh, we can hear clearly now.
Much better now. Sorry.
Yeah, there we go. So key point, I think the first thing to understand is we treat every single individual as an individual, and the frequency and the interaction is back to the individual. All right. So if you respond to a message, you're progressing. We don't communicate to you. So we literally have thousands of unique journeys. Each customer gets treated uniquely, and each customer gets monitored uniquely. So if you're progressing, we're not messaging you at all. In fact, you get very little messaging. If you're getting stuck, we're messaging you a lot more. And if you're interacting, we change the messaging on a dynamic basis. As an overlay, we obviously keep track of how many messages we send to each person, and we make sure that we manage that, because ultimately you've always got another force at play, which is you can't spam people because they'll block you. And if you block them, if they block you, then you can't talk to them. So we're always balancing off between those two. But I'll go back to the primary point. Yes, we nudge, but there has to be value in the communications. And we make sure that there's value in the communications that gives us the right to communicate on behalf of our clients.
Awesome. Thanks so much.
Okay, thank you. Then there's one more. There's Ali who has a question. Can you unmute on your side, Ali?
There we go.
Yes, hi. Cool. So I see I'm really interested kind of building on from that in the interaction between highlighting value and nudging. So I was interested if you've found a difference in the type of content of your nudges. So is there certain nudges that are more like you get a bigger impact than others? I'd be really interested in that, because I think value, what you were talking about now, is really important, like highlighting what people are going to be gaining from this journey. And I'm interested as to how that interacts with the nudging.
So look, I mean, as a general statement, you cannot have nudging in the absence of value. I mean, quite frankly, you just become a painful brand and you damage your brand. So every nudge needs to have value. But it plays out in slightly different ways. If you can collect intents, and when we saw intent through some of the stats that we presented today, if the intent of the customer is there, and we all know how busy we are doing important things like attending webinars. So clients get engaged in a different part of their life, and they don't necessarily attend to things like financial education or changing their credit card or signing up on their mobile contract. So part of what we do, and that's why our interactions are always bi-directional in nature, we collect intent, and then we use that intent, which is collected on behalf and with reference to the client. We use it as a basis to determine how much we can nudge. So you basically want to buy the right with the customer. Just, I always use these sort of dating examples, which are probably not politically correct, but I mean, if you're going on a first date, you need to know how often to ask that beautiful girl out on a date. And it's a judgment thing, and we have to codify that in our rules as well. The other thing that we use a lot of, and it works really, really well, is incentives. So, I mean, it's actually implicit in in the worth example, because the incentives are actually discovery money points. We're actually busy with a campaign with another client at the moment. It's actually a referral campaign, and we're using a coffee to basically do a referral off the back of a positive net promoter score, to say basically, well, you love this experience, so why don't you tell your friends about it? And here's a coffee for the effort of forwarding on that mail. So again, not a simple answer. I guess it's some of the art and a little bit of the science of how we do this. Many factors to consider, but it comes down to effective communication and designing for communication and personalizing a lot.
Great, thank you.
Okay, Timothy's been waiting for a while, so let's quickly get to Timothy, and then anything else we can answer, pop them through, email us, and we'll make sure we answer your questions. Okay,
Thank
Timothy.
you, Jen.
Okay.
Thanks to the inQuba team. I think great webinar. Firstly, crisp, clear message and lovely example in the financial literacy space as well. I suppose my question is maybe a bit of a build on the previous one, but what I'm interested to know is, is it possible to nudge customers iteratively? So as an example, to achieve maybe smaller goals initially, like increasing their engagement and getting them interacting with an organization more frequently, and then over time leading to much more powerful, larger, or maybe more complex goals like upsell and cross-sell over time. And I suppose what I'm interested to know is if there are perhaps any examples from the financial services sector of that.
Yeah, Tim, I think a couple of points on this is, I'm going to make a controversial statement up front to maybe illustrate the point. Actually, I was talking to an analyst yesterday about it. Loyalty programs are always deemed as a thing where you give value to get loyalty, and it's a complete misnomer. And it's just not true. All right. And I make the point because it's a wrong way to think about how you drive outcomes. Okay. Let's take a credit card as an example. People don't change their behavior from 1% back for multiple reasons. Number one, it's too small. And the second thing is that everyone does it. So, I mean, if you're with Standard Bank, you can go to ABSA or, Citibank or Wells Fargo. It doesn't matter. You're going to get your 1%. So it's a complete misnomer to say that incentives on loyalty programs drive behavior. So then that quickly gets you to a situation of saying, well, then don't they work? No, they work incredibly well. But you've got to think about how to use them. And the way you use them is small increments of behavior drive big elements of behavior. And in fact, this morning is the perfect example. So it's so difficult to get someone to complete a course because it's this big thing. It takes a long period of time. It's a huge amount of commitment, and people just don't do it. All right. The brilliance of the work that Haley and Gary have done is they don't try and get people to complete the course. I mean, that kind of misses the point of what's going on here. That's the outcome. The key point is you get them to do module 1 and then module 2 and module 3. And you feed information. It's very much about small nudges over a period of time. But it's also about understanding context. So the obvious point is you can't get people to buy your products if they hate your brand or they hate the experience. It's just not a good time to buy. And that's why bringing together customer experience with marketing and engagement is so important, because you want to make sure that people are in a good mindset before you push them on. So, again, coming back to your question, Tim, about financial institutions, you want to make sure that people are having a great experience, because you can't sell them something until they are. And if they're not, well, then fix that problem first and then get them to move forward and show them increments of value. And again, I'll use my politically incorrect example. It's the same as dating. You can't get the girl of your dreams to go on a weekend away with you until you've at least taken her out to dinner and you've had a few good conversations with her. And it's the same with customers. You've got to build a relationship over time. Gary, over to you.
I just wanted to add, I agree totally with the sentiment of just the iterative move, and I think Tim, you're 100% right in what you're saying. And I think like a good example would be, sort of how do you approach the conversation with a couple around finances? I think most of us would know that that's a potentially toxic and very, very dangerous situation. because as I think Haley said earlier, it's like couples, they talk about money when there's no money. So you're talking about it when there is the highest tension, the least amount of money, and there's going to be an explosion. So effectively, we also understood that long time ago, where even the content itself and the small wins that you're trying to get with people to be able to relate to each other or relate to this should feel that that was actually quite simple and that was easy. And that was actually fruitful, so let me keep going. And it's almost like a good behavior begets a good behavior, and a good feeling gets a good feeling. And so you're talking about the relationship, and we agree with that. The iterative is really, really important. And that's why I spoke earlier about the understanding of the multitude of thin slices along a continuum. You know, and that's why that kind of detail matters. And so anyway, I just wanted to just reinforce, even from our side, where the thinking is aligned and is the same.
Okay, thanks very much. We are over time now, which is a great result. Thanks everyone for your active participation. If you have any other questions and you think of things along the way, please reach out. We will get back to you. You'll receive an email later on with a link to the webinar and a case study paper as well to have a look through. But thanks again, we appreciate it, and please look out for us for our next one. Thanks, Haley and Gary, for all of your insights.
Jen,
Thanks.
thanks for your time. Thanks to everyone for taking the time and for staying on the call. Trent, thank you again. And Hales, I'll chat you in 5.
Thanks, guys.
Thanks, everyone. Have a great day.
Thanks, everyone.